Hi everyone. In the spirit of the FOMC, let's take a look at the US jobs markets and take a look at some of these mixed signals they have here. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at those jobs markets mixed signals, they talk about how we've seen a pretty robust recovery here in November, non-farms climbing a little bit to 227. And that was a little bit of a recovery from the recent hurricanes as well as the Boeing strike. But they do highlight that broader hiring trend is continuing to be less encouraging, which is pretty much the same narrative that we saw out of the FOMC. Average payroll growth has slipped below that 108,000, marking the slowest pace since the post-pandemic recovery, which is really what Jay Powell was talking about. We've also seen a slowing in the JOLTS job openings, labor turnover survey, indicating a reduction in confidence across sectors, and we did see the unemployment rate jump to 4.2 from 3.4. This was a major impact to markets. Markets hated that at the time. We did recover from there, but this had a major impact, especially post-FOMC, where they did acknowledge this weakening jobs market, where jobs growth was slipping below the level that it needs to stay at to keep the unemployment rate at that 4.2% level. And they did highlight here, at the time, the Fed was worried about a loosening jobs market, which was a major driver for them to cut rates, which ended up happening. But the forecast for the jobs market next year was what really triggered markets to the downside. Looking at the fear and greed index, you can see we finished the week at a 28, down from a 49 a week ago. Big pullbacks, obviously, across markets, getting very close to that 125 moving average. I think we're going to touch that here over the next couple weeks. Strength, cratering makes sense. Breadth, also cratering makes sense there as well. Put call ratio finally starting to spike up. I think this has a lot more room to the upside. More similar to a move like this where you get all the way up into the 8 to 9 range. I would expect something like that. Volatility spiked and then pulled back. I think we're going to hold the higher low there, and then safe haven demand sitting in fear and junk bonds sitting in fear as well. Across the board, neutral or fear, with most of the major metrics in extreme fear. Like I said before, usually this is a buying indicator for me, but right now I think we're seeing a change in structure. Certainly a possibility that it's not, but I do think that it is in this case. Moving over to the AAII survey, you can see the bulls continue to contract over the last 3 weeks, and this was taken on the Thursday, so did not include the big down move. I suspect the bears will be much higher for the next iteration of this, and the bulls should be much lower. But right now we are riding this contraction right here, and that is moving to the bear side, and that is a bearish indicator for me. Moving over to seasonality, we are supposed to be in a bullish period. We're pretty much in here now, straight up to the end of the month. We'll see if that comes through this next week. We obviously saw the huge dip, and then we saw a slight rally into the end of the week. Maybe that makes sense here. But for the Monday, small step down. Tuesday, Wednesday, Thursday, very bullish. Moving over to the calendar, Monday, you can see here they do have a bull head there, so relatively bullish there. We'll see if that matters. Short trading Tuesday, up 13 of the last 17, so good numbers there. You also have durable goods and new home sales closed for Christmas, obviously, and then rally here into the end of the month. We'll see. Week after quad witching, up 26 of the last 33. Maybe this is a short-term move. And then last day of the year, down 18 of the last 24. So relatively bearish headed into the end of the year. Moving over to the economic calendar, we do have consumer confidence here for the Monday 2-year note auction there as well. Tuesday closes early, but we still have those core durable goods, 5-year note auction, new home sales, all that good stuff. Merry Christmas for the Wednesday, and then looking at Thursday, Fed balance sheet, crude inventories, jobless claims, nothing crazy. And then for the Friday, relatively low here. Retail inventories, ex-autos, fairly interesting, but not much beyond that. Light week here for the data with the holiday coming up. Moving over to max pain, total options here, 560,000. Put call ratio very, very low at 1.27. Couple of put walls in here down at 590. Again, much lower levels in terms of total options, but there's some pretty solid put walls in there. 600 even has some good puts on it. Call wall right now, 600, but not as strong, 605. For me, this would be relatively bullish. Maybe we get a finish between 590 and 600, which is already where we're at, 592. But max pain is at 600. You could argue this is going to push up a little bit. Bottom of the calls, if we got a bearish finish, would be about 1% lower. Moving over to the charts, looking at the S&Ps, starting off on the weekly chart, you can see we were down about 2% on the week. Big volume there. 17.7 billion shares traded, quite a bit more than the previous at 12.8. You can see we got the down week last week, step down on momentum, continuation step down on momentum. I'm expecting at least one, maybe two more candles of that. Hit the 21 EMA down in the 57 level there, and then we'll see what happens. Do we hit the 21 and hold and bounce again, or does it break through here, head to that 55 EMA all the way down at 53.70? That could be interesting. Let's go ahead and extend out this trend line here, kind of an intermediate trend line between these two levels here, but that would give you some support in the 55.69 area. Definitely interesting. All of those areas could be something worthwhile. And then looking at that daily chart, huge volume on the last candle of the day, which was relatively bullish. Interesting to see that volume coming through to the bull side after getting those big spikes down. But I do want to highlight on the hourly chart just for a second on the SPX, you can see all of that volume coming in on the last candle of the day, which was a selling candle. So most of that up movement had very little volume behind it until that last candle. Huge volume, huge selling. You can see momentum stepping to bearish on the hourly. Either way, on the SPX, you can see broke these levels here, came right to the trend. Trend support is going to be 58.40. If that breaks, next trend in here, 57.62, and then the 144 EMA, 56.64. So couple of levels to work with there. I do expect it to reject from here. It's certainly a possibility we push up to the 21, up in that 600 area, touch this area, and then reject from there and then continue lower. If it does that, that's going to be a big bearish setup for me. The big breakdown of the 21, retest 21, continuation lower, that is a change in structure and you would expect lower lows to come. And then looking at the levels here on the SPX, you can see the same kind of structure. Broke these levels, came back, retested this area, almost already hit that 21 on the SPY charts. Just a little bit different than the SPX, but again, big volume on the selling candle. On the hourly, we looked at it and then hitting this area, started to sell off. My guess is that we see this continuation into this structure here, 574.55, looking for that gap fill back to the 5 November candle. And then looking at the Tasty charts here, you can see we pulled back below the 8 EMA, closed below it. So on the weekly chart, that should be a bearish move, should see a little bit more bearishness into the mid-range here. That would be 574.32. Again, pretty substantial move into that mid-range if we do end up getting that style of move. Still bullish conditions on the weekly chart, but stepping down to that daily, you can see all of that volume coming through, huge volume spikes on the selling action, bearish conditions over through that lowest ATR band, very close to the 89 EMA on the daily chart. I'm expecting it to reject from this area here, and you can see we pulled back, hit that 34 EMA zone in there at 594.95, pulled back from there. Below the 8 EMA right now, this is a short-term downtrend. 8 EMA below the 21, getting ready to cross that 34. You can see we overthrew the 55, almost hit the 89. I just think we're extended in here to the downside, and I think this is going to continue to trickle down. I don't think it's going to be a massive straight down move. I don't think we have that kind of catalyst, but I could absolutely see markets selling off over the medium term. I've been talking about it for a while. Momentum still bearish, and you have the big volume spikes to the downside, continuing to say selling to me. And then once again, stepping down to that hourly just for a moment, you can see the volume spikes here coming on those selling candles at the end of the session. Did see a slight bounce after hours, but huge selling there. I would expect more selling. Moving over to the NASDAQ here on the weekly chart, you can see down week 2.25%. You can see the structure that we're in. You can see this zone here in 2021, peaks in 2021 December, and then sold off from there, big move down. And now we are hitting those same trend lines again. We're not quite above that uppermost trend line, which we did overthrow here, but we're very, very close. We're retesting this trend here. Once that broke to the downside, that did trigger a pretty substantial move. Don't forget, this was about 35% from top to bottom. If we did see a move like that, 35% or so, that would take us all the way back into the 14,500 range, which is still gains from that most recent low. That would be a higher low setup here, but that would take you all the way back to the October of 23 price range, a substantial move here, and then rally up from there. That would also overthrow the 144 and the 200 in here, just like we did here. And then once we got back above it, that was continuation rally. So short term, I still think it's bearish. Medium term, still looking bearish. We are at very, very critical levels. I think we are at risk for this. Is it going to happen right now? Maybe, maybe not. Are we more like this right now where we have short-term pullback, rally up, consolidation, then breakdown? Maybe this is the start of the consolidation. Certainly a possibility. This is the structure that I'm watching. And then stepping down to that daily chart, you can see we did get below this trend here just for a moment on that gap down. 55 EMA very close there at 20,758. I think we'll probably touch that next week at least. Volume coming through on that last candle there on the index. Again, all on that last hour, just like we talked about. Still looking for the gap fill back here, 5 November. That gives you a target in here around the 20,200, somewhere in there. And then looking at the Qs chart, you can see this structure that we're watching. Very, very early stages here. Maybe we get a little bit more consolidation, but is this the start to the breakdown here? Certainly a possibility. You can see we're in this range that's marked a top many, many times back here, September, here, October, again, November, and then again here, December, pretty much like clockwork over the last couple months. Hit that trend again, sold off from there back to the lowest range, which did hold back here beginning of November in here, didn't quite touch it, and then ended up rallying through. Hit the upper trend again. Does this zone hold? Certainly a possibility, but you have to entertain the potential for a downtrend start. Moving over to the Tasty charts here, you can see we did not quite get to that upper ATR band the same way that we had been on these last mega rallies. Touched it here, pulled back, didn't quite hit it, starting to pull back already. Volume coming through on the selling candle. Again, did not quite close below the weekly chart the way that it did on the SPY charts. So the NASDAQ outperforming on a technical basis despite being down more on the actual weekly basis. And you can see that 8 EMA sitting there, 512.67. I would expect that to get touched again at least next week, so that would be about another 1% down move. And then the 21 EMA is your next zone of support, sitting all the way down at 495.11. I would expect that to get touched as well. So you have the start here, couple of down candles mid-range, bear candle, follow through mid-range. Bear candle, this was one of the few where you saw a slight rally right after a big down week, but I do think this is going to see a bit of a change, like I said. And then looking at that daily chart, you have bearish conditions here, ATR trailing stop all the way up at 544.78. Again, looking for the lower high set up here, continuation lower, volume coming through, momentum bearish. Current support dipped all the way down almost to the 55 EMA at 506.88, rejected off of that 8 EMA here on the daily chart. Again, bearish conditions. Haven't seen the cross quite yet, but looking for this to continue lower to those lowest ATR bands potentially within the next week, which would be in line with the 89 EMA down in that 497.56 area. And then don't forget the gap fill, 5 November. That price range here is in the 492.50 area, well below those lowest ATR bands. So does it happen all in 1 week? Maybe, maybe not, but I still think this is going to start to sell. And you can see it here. It definitely looks weak with this kind of consolidation low here. Not quite lower than this low back in the end of November, but if this low takes out the low here, back into that 492 area to fill the gap, I think you're going to see a definite change in structure where you have a lower low and then you get a lower high, continuation lower. So that's what I'm looking for, especially with that bearish condition. We haven't seen that since all the way back here in September. Moving over to the Russell, you can see 4.78% to the downside, massive move there. Close below the 21.55 EMA is your next support for me on the dynamic at 209.91. You also have trend support in here, 208.60. No major gaps the way that we've been looking at the other charts, but still a big breakdown 3 weeks in a row. Momentum bearish, RSI bearish, big volume. Everything says this should continue to sell here. And if it does get into this zone, that's still potential where you could hold structure here, get the continuation higher. It's not impossible for that to happen. Overall, medium term is still bullish structure with higher highs and higher lows. Right now, you are holding this kind of consolidation low in here. If it breaks down into this range, that would start to be a change in structure with a lower low here, and then you look for that lower high continuation. So for right now, still holding in there. And you can see it on the daily chart holding this zone in here. 144 EMA in there at 218.03. And you can see rejected off of that high from yesterday from the Thursday session. Momentum bearish, RSI still bearish, hitting that overextended area, looking for the retest of the RSI in there. You can see super extended, pull back, hit the SMA, continue to sell from there as the potential setup. So that does give you a potential for a slight rally into here, short term, lower high setup, continuation, lower style of move. Moving over to the Tasty charts here, you can see we hit that second upper ATR band, came up a little bit short versus this previous move here, hit the upper band, pulled back, came up short of that upper band, sold off. So now we're in the mid-range. Still bullish conditions on the weekly chart. Does this pull back to the ATR trailing stop? That would be here around 206.17. Volume coming through, momentum stepping down just like everything else. Looks relatively bearish. But again, you're already in bearish conditions on the daily chart. Very, very extended. Over through that lowest ATR band, pulled back, tested it, and then sold off a little bit more. Big volume coming through on the selling action. 144 EMA on the daily. Right there at 220.04. This definitely looks significantly more bearish. We talked about how this is fully round trip this move here. Lots of red days in a row into this kind of culmination sell, waiting to see if we hold this structure here. Sideways choppy, lower high setup does make sense. Maybe you see a short-term rally into here and then continuation sell-offs. Moving over to the Dow here on the weekly, you can see 3 down weeks in a row. 2.18% to the downside, hit that 21 EMA there at 421.93. Touched that level, saw a little bit of a bounce, ended up holding 426.20 on the closing basis. Again, still expecting a little bit more downside here. 21 could be the level. Momentum still bearish, RSI still bearish, volume big selling. Everything says this should go a little bit lower. Obviously, we were very extended to the upside. RSI has only pulled back to the 56 area, so nowhere near oversold conditions. Plenty of room to the downside to go lower. And then looking at the daily chart here, I did add one trend line here marking the bottom here in September and then again here in November. And you can see breakdown retest, close below it. So for me, breakdown retest continuation lower is the expectation. Momentum did step up a little bit after being pretty extended after that 10 straight days of bearish momentum, but still breakdown, retest, breakdown says this should go lower in my opinion. Moving over to SPY Russell and NASDAQ SPY. Interesting to see what we ended up getting here. So the Russell continued to underperform. SPY continued to outperform. Got the candle break continuation on this. Momentum still bullish. RSI still bullish. Right now that says bearishness for me because when the Russell is underperforming, that's usually when we're seeing a contraction in markets, as the Russell is the most at risk for economic downturn. So that's what we're seeing here, starting to push back to that 266 level, just short of it here, expecting the continuation on this as the Russell continues to underperform with the forecast of that economic weakness coming from the FOMC. And then looking at the NASDAQ SPY here, you can see big wick to the high, ended up selling off, and the SPY was the top performer for the week. So interesting to see that switch. Wasn't expecting the NASDAQ to underperform the SPY on the week, but that is what we saw because of that weakness that we saw. So if markets continue to remain bullish, we should see the NASDAQ continue to lead to the upside, but that's not what we ended up getting, and I would expect this to continue a little bit lower, at least to the support here at the 355 level. Moving over to the SPY divided by the M2 money supply, you can see the critical level here at 28.50. We touched that back here on the 2 December week. Since then, we had a down candle, continuation lower, second candle. Now we're right at the trend here. Interesting to see that trend holding still. You can see this trend originates back here in May of 22, marks a perfect top here in July of 23. Kind of a consolidation high, did overthrow it a little bit before pulling back. And then we clean pushed through this level here, choppy action, continued to remain relevant as support. And that's where we are right now at the closing price of the week. Critical zone there, 27.72. Almost pulled back to the 27.25 level. The low of the week was 27.26, so missed it by 1/100th. My guess is this will push through there. Momentum bearish, RSI bearish. 21 EMA, 27.13, looking for a continuation into that zone. And then if this starts to roll and establish lower highs here and lower lows below that 27.25 level, that is going to be a big problem for markets. Remember, I've been calling this a bubble for a very, very long time. The really maintainable level is this 2205 level. Very critical here. You can see 2205 peak, 2205 peak back pre-COVID, and then again here December of 21. And then in terms of the amount of money in the M2 supply versus the SPX, very, very high levels, bubble territory for sure. Again, just because it's a bubble doesn't mean it can't go higher, but understand once this starts to go, it is going to be a dramatic move in my opinion. Moving over to the Mag 7 on the weekly chart, we did rally up, hit this trend here, and then immediately reject from there. So you got a slightly higher high, closed right at the low from the previous week here on the 9 December week, ended up down 2.39%. Momentum stepping to bearish, RSI pulling back, volume ramping. This looks like a peak in markets, short term at least. And then we'll see if this pulls back, hits the key support levels 9 EMA is all the way down at 302.29. If we did get a mean reversion down to that 302 area, that's another 5.5%. The Mag 7 does usually move a little bit more than markets, but if the Mag 7 is selling, that is absolutely going to take markets with it. These are the biggest stocks in the world, and of course, as they sell, the markets will go with it. Moving over to Apple and Microsoft, Apple did not care at all about what was happening with the FOMC or anything else. It was up 2.5%, momentum still bullish, volume coming through, closed right on the high. Everything says this should go ahead and continue up to the trend resistance in here, 271 potentially. Maybe this is the place to be. Apple continues to go straight up. You have 5 weeks in a row of straight up price action. No indications of that slowing quite yet. And then looking at Microsoft, obviously not the same thesis. You had 2 big up weeks, hit the key resistance here. So your resistance is that 453.30 level. We ended up closing below the 440.72 level, pulled back all the way to 429, touched that level and ended up bouncing. You had a little bit of trend structure in here, but momentum stepping back to bearish. And now what you have is a true lower high. We talked about these in here, which you could argue was true, but now you had a failed breakout, breakdown. Need to change the structure a little bit to something more like this. And then we're going to see what happens from this key resistance area. Is it going to break through these levels here? Is it going to break this consolidation of EMAs? Is it going to finally push back down to this 394 area, which I do think is where it's going. I've been saying I think this is bearish for a while. You can see I had a potential structure, clean break through this area here, tried to break higher, and now we have a failed breakout, continuation lower back into this range, in my opinion. Moving over to Tesla and NVIDIA, you can see Tesla was down 3.48%. This is a massive topping tail. In my opinion, big wick to the upside, closed negative on the week, momentum bearish, RSI super extended. Where is this going to go? Short term, your trend support's in the 374 area. I have a level here, 414.50. That was the previous all-time high. We'll see. Do any of those levels start to hold? Certainly a possibility, but it was super extended. And if Tesla starts to see some negative news potentially around reservations on their cars in Europe, which I did see some news around that, this could absolutely break down pretty substantially, especially with how extended it is. And then looking at NVIDIA, we talked about how NVIDIA was doing quite well. And it ended up staying positive on the week, 0.34, touched the level, 130.35, hit the key levels like we talked about it doing, hit the 21 EMA, bounced from there. Momentum and RSI are still bearish, but still holding up very, very well, much better than markets this week, still hitting this previous high consolidation and then touching that level and then bouncing. So looks okay. I think NVIDIA is probably going to hold up a little better than it looked like it was going to coming off of this previous high here. Talked about the head and shoulders on the daily chart. Maybe this is a medium term style of head and shoulders, where this is your bigger left shoulder head waiting to form this longer term right shoulder. But for now, seems to be holding up fairly well in this area at 130.35. Moving over to Amazon and Google, you can see Amazon down 1.21%, sitting pretty much on its all-time highs. We talked about the doji candle 2 weeks ago. And then this week we got the negative candle, 1.12. You can see momentum stepping down, RSI super extended. Amazon's been on a massive run, clean breakout to price discovery, all-time highs. Can it continue to maintain those levels? We'll see. It's definitely going to be interesting. I think we pull back to the trend support at least one more time, down in the 219.19 area. And then looking at Google here, you can see pretty much a doji candle, slightly positive, 0.38. Managed to do quite well on the week and still riding the high of their quantum computer, in my opinion. But the volume, quite bearish. Tried to go higher, hit these key levels, and sold off from there. So does it pull back? Where does it go? Support for me would be the 179.42 area. These previous consolidation highs. Want to see it touch that level, continuation higher if it's going to do it. Right now, it's basically sitting at the all-time high here from July. And if you did pull back from there, you could argue maybe double top on a closing basis. That's something to consider as well. Overall, structure still quite bullish, just looks very extended in the short term, especially relative to markets, which were down obviously, and Google was positive on the week. Moving over to Meta and Broadcom, Meta was down 5.66%. One of the worst performing stocks, especially in the mega cap range. It was at all-time highs. Now you got the doji candle breakdown, confirmation lower, momentum bearish, RSI bearish. Everything says this should pull back some more. It's sitting right at the 9 and the VWAP. For me, 564.51 makes sense. And then looking at Broadcom, huge topping tail, hit that key upper trend line here. You can see it's been an important trend for a while. We've been in this zone for a while. hit the upper limit, sold off. Now we're at this kind of intermediate trend line here. Volume was bearish. Momentum hasn't gone with it quite yet, but it did finish down 1.78% after being up 25% the previous week. Moving over to staples and discretionary, staples fell a lot, 2.5%, underperforming the markets. Usually not what you would expect. When markets are falling, usually staples fall a little bit less, but in this case, they fell more. Interesting to see everything selling. Everything selling again is another indicator of more bearishness to come. Momentum bearish, RSI bearish for staples. And then you got discretionaries, big step down here, expecting multiple weeks of either sideways choppy to bearish price action on that weekly. Hitting the key critical level there, you can see very long-term trend. We've been watching it for a while. That was the area where we thought we were going to go once we saw some of these previous highs start to break, ended up hitting that trend line and ended up selling from it. Momentum, like I said, says step down, continuation lower, at least to that 9 EMA, which would give you about another 4% lower for the mean reversion style trade. So everything says this should go a little bit lower, and we are seeing risk off, everything selling on this week. Moving over to breadth here on the 20 and 50 day, you can see breadth was obviously very, very negative, but we did hit some critical levels here. 20-day breadth getting all the way down to a 7.37. Some of the lowest numbers you see on 20-day breadth is in that range. So you can see all of these wicks in this zone ended up being bottoms. Usually this is where you see bottoms, and that's why I said it would not shock me to see a little bit more short-term rally. And I just wanted to highlight the daily chart here. You can see that step up on the last candle of the day. Momentum stepping slightly to bullish after being extremely oversold here in a 23 area. We'll see. We did hit the critical level like we thought we would off of that Wednesday, Thursday, and now Friday getting a little bit of a bounce towards the 16. I would still expect a lower high, but just with how extended you are, maybe we see a little bit of rallies off of that. And then similarly here on 50-day, lower low, not quite as extended as the 20-day. Didn't quite get to these lows back here from March. Going full screen on it, you can see the real critical levels are all the way down here in the 20 area. This is when you know you're pretty much guaranteed to get some buying action off of those levels. Here, we're kind of in the mid-range. Is this a bottom? Maybe. We've seen it here, ended up being a bounce, rallied off of it. In here, we got here, saw a little bit of a bounce, continuation lower. This is more realistic with what I think we're going to see. We get a key level, just like we had here, key level, pretty much the same peak high. Got the lower high set up here, sell off. Similarly, lower high set up, sell off. But I think we're going to see maybe a slight bounce here, continuation lower, maybe something like that. But since we didn't quite get this low here, maybe this is a shorter term lower high setup and then the continuation lower to this first bottom here, which we haven't quite touched yet, which would be in that 15-15 area. I think you could make the argument that the 50-day is probably going to go a little bit lower. The low of the week was in here in the 18 area. That is pretty low, and you can see the slight rallies coming through on the Friday. Momentum stepping to bullish, RSI stepping to bullish, but we'll see. Short-term rally, possibility, just like the 20-day, but not getting as critical level on that 50-day breadth. Moving over to 200-day breadth, massive down candle here. Again, one of those paradigm shifting style candles. So you can see very long consolidation on breadth. Huge breakdown from all of these levels back into this 50 range. We haven't been here since back here on the break up in November of 2023. And that ended up being a very strong rally through there. And now I think we're going to see a very strong rally to the downside. You can see when we had the breakdown here, big move down, consolidation, kind of choppy action. Ended up selling much, much more all the way down in the 24 area. And that's what I think is going to happen. I think we're going to go much, much lower. Whether we see a little bit of choppy action, a little bit of rallies in here, lower highs, maybe. Anything is possible, but the fact that we had this massive breakdown on 200-day breadth to me says we are now looking for a series of lower highs and lower lows. Moving over to the dollar here on the weekly chart, another positive week, 0.18. We're still stuck at this trend line here, the one we've been watching between these two levels here, pretty much marking those tops perfectly, but you had the shadow here. So closing prices, lower level, upper prices right there. Based on current trends, we go a little bit higher, 108.11, maybe push through here to 108.7. Want to see it close above 108 if it's going to do it. Momentum bullish, RSI bullish. Higher prices coming, continues to look very strong here on the dollar, which again is the inverse of markets generally. Dollar looking strong, equities should be going lower. We haven't seen it react quite yet, but if this continues to push here, you can see this was a big move here for the dollar, and that was a very bearish period for the stock market. That was the October low of 2022. Moving over to bonds, TLT and JNK, you can see big down moves here as well. JNK down 1%, TLT down 2%, momentum bearish, RSI bearish, big breakdowns on RSI, big volume selling. You can see this high consolidation ended up being support on JNK. We talked about it briefly. That was the key level. And again, with this lower low on JNK pushing down to the 55 EMA, this is another indicator of risk off in markets. This is probably going to go a little bit lower. How much lower? Hard to say. 93 could be an interesting target right here. Maybe we get back into this consolidation back from the pretty much June of 22 all the way until November of 23. That kind of range in here, 91 to 92.5. That would be interesting, but short term, definitely bearish. You do have some key support levels, but big breakdown similarly here on TLT. Talked about the low of the consolidation from April. I think that's going to be interesting. Got very, very close to it. The low of that consolidation was 87.34. The low of this week was 87.51. So we missed the low just barely. My guess is we'll at least touch it before we see any kind of bounces. You can see what that looks like in here. Is it going to fall through to this previous low at 82.60? That was the relative low. Not impossible. I wouldn't suspect that. I don't think yields are going to go that much higher, but I do think we will at least touch that level, maybe 85.90. I would expect to hold above this previous low here. Moving over to the VIX, big up week here, nearly 33%, closed right at the 1850 level. I think we're going to get continuation here. I think this is more like this style candle where you had a big move, held the level, looking for that big continuation. Does it hold that? Not usually, but weekly momentum, big step to bullish, expecting at least 1 to 2 more steps to bullish. I think we'll at least get into the green here as well. Maybe we get 1 or 2 into the green. RSI bullish as well. So 1, 2, 3, 4, 5, maybe 5 weeks of some choppy action to the upside on the VIX, which obviously is going to be bearish for equities. That's what I'm looking for. Does it have to be dramatic? No. You can see in here 3 weeks of bullishness in here, which was bearish for markets, obviously. You can also see it here. Pretty consistent up move, bullish momentum. Waiting to see this swing, and I do think it will go. Moving over to my accounts, I ended up losing about 1.7% or around 2,300 on the week. Not super great, but of course the NASDAQ was down about 2.5%. The SPY was down about 2% as well, so not terrible. A little bit better than markets. And then looking at my positions, you can see a 523 call and a 524 call. Very, very small potential for profit there at $127. We did see a very interesting spike in the after hours into that 520 area. Again, I don't think that's necessarily going to hold, but you can see very moderately bearish going into that Monday session. I know we talked about some bullish scenarios in there, and I will be watching closely. Obviously, if we do get continuation off of that Friday session, I will change up these positions. And you do have to trade the markets that you have. So if we do get a slight continuation higher through those levels off of the Friday rally, obviously I'll flip these positions. But for right now, I think we will see a little bit more selling. Maybe we get a bottoming pattern in the Monday, Tuesday, and then you can see rallies through the end of the year. Certainly a possibility. Do those hold up? I still think that they won't, but short term, it's not impossible to see a rally through the rest of December. Let me know down in the comment section what you think of the jobs market. Is it going to signal the start of a potential recessionary, depressionary environment within the next 6 to 12 months? Or do you think we're just going to hover at these low levels and the concerns from the Fed and the economic analysts is a little bit too overblown? Let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.